Garcia, a founder of SM Investments and been the richest man in the Philippines, once said,
"There is no such thing as overnight success or easy money. If you fail, do not be discouraged. Try again."
When you do well, do not change your ways. Success is not just a good luck.
It is a combination of hard work, good credit, standing,
opportunity, readiness, and timing.
Success will not last if you do not take care of it.
We are One in a Million Group, and we're here to discuss to you this time the topic entitled A Descriptive Analysis on the Philippine Stock Market.
Some people are contented with their compensation income, are just like they keep on working, yet not enough to support them in the future. Yes, there's a pension or benefits, but that's not enough to provide individuals' expenses in the future or in times of emergency.
People always dreamt living with their own house and lot, a nice car, and be financially stable. However, these dreams cannot be achieved with just having one source of income. So, there are a lot of ways to have another income, such as, but not limited to, having a business, investing in mutual funds, and owning a stock. But, what is a stock?
A stock represents one person's ownership in a corporation. Based on Act Number 1459 or Stock and Stockholders Act, Section 35, year 1906, the capital of a stock corporation shall be divided into shares, for which certificates signed by the President or the Vice President, countersigned by the Secretary or Clerk, and sealed with the seal of the corporation, shall be issued in accordance with the bylaws.
Stocks are risky and there are lots of things to know. But once a person knows the stocks work, then successes will find its way. Therefore, One in a Million's group will provide a descriptive analysis to help people what kind of stock market that the Philippines have.
And to know more about the Philippine stock market, we should know first the basic terms such as what are the different types of stocks and what's the suitable stock for an individual. Am I right, partner?
Yes, partner. Stocks are classified according to types and classes, depending on the characteristics and earnings potential, and there are types of stocks according to its rights, namely common stocks and preferred stocks. Common stocks, also called as ordinary share, is a security usually purchased for the participation in the profits and control of ownership and management of the company.
And preferred stocks, or can be called as preference shares, is a security whereby the holder has a higher claims on the assets and earnings of the company. But how do common stocks differ from the preferred stocks?
Common stockholders have voting rights related to the number of stocks they owned, and when it comes to the bankruptcy of the company or the rights to the company's assets, common stockholders receive the payments first before the preferred stockholders, and usually, it is not assured that they can receive dividend payments. However, the return potential of common stockholders is high because their profits are coming from the capital gains.
And when it comes to preferred stockholders, they do not have voting rights, yet they are the priority on fixed dividend rate and claim over earnings and assets in the event of a company's liquidation. Fixed dividend can be cumulative or non-cumulative. Cumulative preferred stock accumulates dividends each year until the dividends are being paid. And in non-cumulative preferred stock, the dividends that do not paid in prior year do not accumulated from one year to the next. In addition, the preferred stockholder's return potential is lower than common stockholder because unlike the latter, the preferred stockholder's profit is coming from the dividends only.
And aside from the types of stocks according to rights, there are also types of stocks according to its characteristics. Though there is no formal definition or criteria to classify a stock according to its characteristics, analysts generally describe stock as first, Blue chip stocks. These are shares of well-established and financially sound companies that have demonstrated their ability to pay dividends in both good and bad times. They also exhibit more modest but dependable return and are relatively of lower risk. Blue chip companies are also characterized of having little to no debt, large market capitalizations, stable debt equity to ratio, and high return on equity and return on assets.
Second is income tax. These are shares of those companies with good dividend payment history due to steady profits. Since they are stable, income tax generally have a lower level of volatility. The third one is growth tax, and also called as Flores tax, or share of corporation whose earnings are expected to grow at an above average rate relative to the market. Growth tax does not usually issue dividends as earning or invest in capital projects. Then defensive stocks, these are shares that provide regular dividends and stable earnings, regardless of the overall condition of the stock market. Defensive stocks remain stable under difficult economic conditions. Generally, these are stocks of both oil and food-based companies which are characterized by steady demand amidst hard times.
The next one is cyclical stocks. These are those sensitive to business conditions or cycle, strongly tied with the economy's performance. These companies produce or offer services that are low in demand when slowdown and increase when business peaks.
And the last one is speculative stocks. These are shares that rise quickly when the economic growth is strong and falls rapidly when the growth is slowing down. A speculative stocks is considered very risky because of its volatility. It increases or decreases rapidly depending on the economic condition.
After we know the different types of stocks according to its rights and characteristics, let's now look on the stock market here in the Philippines. There are two markets where the transactions are happening, specifically the primary market and the secondary market. And to give you an idea what the primary market is, here's Kathleen.
Thank you, Via. In the primary market, new shares are issued and sold to the investing public for the first time. It is where the capital is actually raised by the company selling stock directly to investors, typically through an initial public offering or IPO. Initial public offering. It is where the company's stock are offered to the public for purchase for the first time, the issuing company being the only seller and with a set IPO price. And to illustrate, the San Miguel Corporation or the issuing company decides to sell a new shares to raise equity funds. It will be a primary market transaction wherein the IPO will find investors and investors will give the funds to continue the operation and expansion of the San Miguel Corporation, and with that, the investors will become part owners of the company. Now, let's go see how the secondary market works.
The secondary market is where securities can be bought and sold even after they have been issued to the public in the primary market. The investors who wants to buy an existing shares of a company cannot buy directly anymore to the issuing company. Instead, they can buy it to an existing shareholders who are willing to sell their shares. Also, the proceeds from these transactions will go directly to the shareholders who sell their shares and not to the issuing company. And there are two examples of secondary market: the Philippine Stock Exchange or PSE and the over-the-counter market. Philippine Stock Exchange facilitates the buying and selling of issued stocks and warrants. If the investors are seeking to invest their excess funds through buying of securities, the PSE provides a suitable market for trading of securities between the investors and the company. Meanwhile, the stocks that are not listed in the PSE but registered for sale in the Securities and Exchange Commission can only be available at the over-the-counter market or the OTC. Over-the-counter market are transactions carried out by direct inquiries and negotiations among the buyer and sellers through different forms of communications such as mails and telephones. This market is not a specific organization, but another way of trading security. And to illustrate, if you want to buy shares for San Miguel Corporation but fail to do it in their initial public offering, you can still buy it in the secondary market with an existing shareholders of San Miguel Corporation or the one who buy it in the primary market.
Now, let's proceed to Philippine Stock Market Index. But first, let's define stock market index. A stock index or stock market index is an index that measures a stock market or subset of the stock market that helps investors compare current price levels with past prices to calculate the market performance. Indexes are used as benchmarks to gauge the movements and performance of market segments. And there are different kinds of stock market indexes in the Philippines. The first one is PSEI Composite. It is stock market index of the Philippine Stock Exchange consisting 30 companies. It is frequently seen as an indicator of the general state of the Philippine business climate. The second one is PSE Financial Index. This is the main stock market index of the Philippine Stock Exchange for banks and other financial institutions such as Bank of the Philippine Islands and Metrobank. Other companies listed include the China Banking Corporation, East West Bank, and Union Bank of the Philippines. Lastly, PSE All Shares. It is stock index in the Philippines. It forms part of the Philippine Stock Exchange and includes almost all common stocks listed on the exchange. All shares includes common stock of the Philippines on the exchange, excluding those listed on Small and Medium Enterprises Board.
Since we already know the world of Philippine stock market, we should also know its participants.
That's right, ate. We should also know who are those participants involved in the stock market. The first one is the investor, also referred to as stockholders or shareholders. They are those who own shares of stock of a publicly listed company. They are accorded certain privileges like the right to fair and equal treatment, the right to buy or exercise related rights, and the right to receive dividends and other benefits due to the stockholders. They are classified as either retail or institutional and local or foreign. The second one is a stockbroker or trading participants, which is licensed by the Securities and Exchange Commission or SEC and is entitled to trade at exchange. They act as an agent between a buyer and a seller of stocks in the market. For the services as stockbroker, they are received from their clients either buying or selling commission. The third one is the listed or public company that can also be called as issuers. They are those whose shares of stocks are traded on the exchange. These companies qualified with the stringent listing and regulatory requirements of the PSE and have gone through initial public offering or IPO or listing by way of introduction. Public listed company is a company whose ownership is organized by shares of stock which are intended to be freely traded on a stock exchange or in over-the-counter markets. And the last one is stock transfer agent, is considered as the official keeper of the corporate shareholder records. The stock transfer agent provides the issuers or the listed company with a list of the holders of its securities. They effect transfer of beneficial ownership and process corporate actions like stock or cash dividends, stock rights, stock split, and collation of proxy forms.
Since Arianne talked about these stock market participants, we should also look on what kind of those people investing in stocks nowadays. Whether is it a male or a female, a teenager or an old citizen, employed or not, and too many factors. And here's a report conducted by the Corporate Planning and Research Department of Philippine Stock Exchange on Stock Market Investor Profile 2018 to be reported by Kaizelyne. Ate?
Thank you, Kat. As you can see, stock market account holders are mostly male investors, having 54.6%, outnumbered their female counterparts by 3.2%. And when it comes to age range, almost 2/3 of the retail investor belong to the younger age groups, those people with the age range of 30 up to 44 years old. And when it comes to location, mostly investors are located at Metro Manila, having 62.5%. Next are the investor in Luzon, having 21.5%. And the rest of the results are from Visayas, Mindanao, and overseas. Lastly is the employment status. Retail investor base remain to be predominantly domestic employees, having 65.6%, with those self-employed comprising the second largest employment category, having 14.6%. And the least account holder are students, having 2.6%. After we knew about the stock market investor profile and other basic terms about stocks and in Philippine stock market, we can say that investing in stocks is a great idea. However, we should also look onto the other side of stocks, especially when it comes to unexpected events. Particularly now that everyone is experiencing a lot of downturn because of pandemic.
The group gathered some data to indicate the flow of stock in the Philippine stock market. But before we proceed to the data gathered, let's define some terms. Last price. Last price indicates the most recently reported trading price for a future contract. The term open means it is the starting period of trading on a securities exchange or over-the-counter market, while the low means it is the lowest price of a stock. High means it is the highest price of stock that has traded during the course of trading. Volume. Volume measures how much of a given stock that has traded in a period of time. Lastly, net foreign. Net foreign refers to the value of foreign assets owned by the nation minus the value of its domestic assets owned by foreigners. If the NFA balance is positive, then it is a net lender, while a negative NFA balance means it is a net borrower. Based on the data gathered in the month of November and December, where the coronavirus is developing and not yet affecting the Philippines, the price of stock is approximately in 7,000, and the volume of stocks that has been sold and bought are in billions. However, in the month of January up to February, where the virus is starting to spread in the Philippines but not have a local transmission yet, merely affect the performance of the stocks. Then again, in the month of March up to May, where local transmission is happening, lots of Filipinos being positive with the virus and enhanced community is being implemented in a lot of areas, really affects the performance of stocks, whereas the country's stocks dropped to 2.4% to an index level of 5465 as the pandemic crisis continues to haunt the global economy. And this is equivalent to a 40% year-to-date loss.
After we discussed all the objectives of this analysis, we can now ask the members of the group to give their conclusions and recommendations based on the discussions. Can you please give your insight, Via?
I can conclude that stocks can give one person a high return, yet it is risky, especially in downturns. So take note of this. I can recommend all of you to maintain a diversified portfolio. Spread your funds not just in stocks, but also in different kinds of investments.
I agree with you, Bia, and that leads me to my conclusion. Better educate yourself than paying the consequence in the end, and thus I recommend that similarly to what Bia said, don't put your egg in one basket. Spread your money in any other long-term investment.
That's great, Via and Arianne. Also, I conclude that stocks is a long-term income that has high risk not just in times of downturns but also on how investors handle it. So I recommend that don't panic in times of downturns and always make a rational decision. Remember that stock is a long-term income, so you should have plenty of time to ride out this current market downturn.
Can I also add a conclusion and recommendation? I observe and conclude that there are still people who start investing at a late age. Then I recommend that start investing at an early age. Open your mind and be educated. How about you, Ate Kay?
That before investing, people should also know that there are different stocks that can be the best or worse depending on the situations. Therefore, I recommend that better to choose what type of stock is suitable for you and for the situation.
And in our situation today, I can also recommend that it's time to invest in blue chip stocks because of its stability and usually easy to recover in this kind of situation. So, I hope One in a Millions group enlighten your heart and mind about the stock world here in the Philippines. So I am Kathleen Flores,
Emi Pagtalunan,
Kaizelyne Balubal.
Arianne Cruz.
Marnel Macalinao,
Permijo.
Saying thank you
and stay safe.